Let's talk about some numbers. Marico actually has been rising after a strong set of numbers that the company reported. In fact, Credit Suisse has raised their target price on the stock to 275. They say that the profit growth was well ahead of what the street was estimating, and the volume growth as well of 5% was quite strong. The stock, as you can see, is rising on the back of high volumes today. Let's go across now to the management to talk more about that. Saugata Gupta, the MD and CEO of Marico, joins in with more details. Saugata, I want to begin by asking you about what's happening with your gross margins. For yet another quarter, we actually saw a bit of a contraction in the overall gross margins. Can you take us through the details?
So if you look at the gross margin contraction, actually, it's the material cost contraction has been around 300 basis points and not 600 basis points. We have passed on a significant portion of our cost input in terms of price increases. Having said that, I think as an organization, we believe in operate in emerging markets, and therefore we have to balance volume growth and also ensure market share. And as a result, if you really look at it, I think 80% of our portfolio we have gained market share, and we have posted a decent volume growth. And I think one has to look at what is a sustainable margin like, and we believe that for the business, I think the 14 to 15% margin is a sustainable margin for us to maximize growth.
All right. Well, prices for Parachute are already up by about 25% if you compare it to April last year, and there is very little respite that we're seeing in raw material costs. Are we likely to see further price hikes, or would the company now look at garnering higher market share instead?
So whatever has been the price increases which we have taken is enough to absorb the current cost push. We don't see the market right now, we would expect the market now to go sideways as far as the input cost is concerned in the immediate couple of months. So I think this is a pricing which we should be able to sustain over the next 1 or 2 quarters.
Okay, so Mr. Gupta, would it be fair to assume a 15 to 17% margin trajectory going forward?
See, I think as I said that we will also need to invest to grow, and we believe that around a 14.5–15% kind of a operating margin for the business is the one which is sustainable to drive both volume of growth and market share. I think we need not be, and as I said, that one has to look at the market share again, one has to look at the volume growth, and I think that is something, and as you know that given the fact that we believe that there will be a gradual recovery as far as consumption is concerned in India going forward. We are seeing some green shoots if you look at some of the results this quarter in the consumption space, but going forward there will be a gradual increase. So once it happens, then I think also some of the input costs are cyclical, so they are expected to then taper off over the next 3 to 4 quarters. So a 14 to 15% gross operating margin is something which we believe is sustainable for maximizing growth and market share.
Okay, but for another quarter, Marico has reported very encouraging 11% volume growth in value-added hair oil segment. What's your strategy for these high numbers, and is that sustainable?
See, I think if you really look at the value-added space, we have been delivering double-digit volume growth except in one quarter, which was the Q4 last year. We have a broader participation strategy, and we don't participate in one single segment. We have been able to also premiumize through specificity of needs, for example, in hair fall. At the same time, we are also playing at the bottom end strategy in which we are gaining market share by providing a parity and a superior product with a certain attractive pricing in the Amla segment. So I think our growth has been with 4 or 5 brands together rather than participating in only one sub-segment and one category. So it's a broad-based growth which we are continuing to gain both in volume share and market and value share across quarters.
Actually, I think our viewers are listening to you very intently, Mr. Gupta, because the stock is now up almost 12% and big volumes traded on the counter as well. Let me talk about the international business, because it's reported a very strong 18% margins in the international business, almost a 500 basis point surge on a year-on-year basis. Do you think these levels of margins are sustainable?
For international business, I would say a 14 to 15% is a right kind of a margin for sustainable over quarters. I think we will like to invest to grow. One of the changes in strategy which we are doing is that we are going to concentrate, and we have built capability of driving organic growth. So we would like to see 15 to 20% every quarter organic growth in international business. Any which is at constant currency, we should be getting double-digit growths. Any acquisition should be a top-up rather than acquisition being the only vehicle to drive growth. And so therefore, I think we would like to go back into invest to grow mode. A lot of synergies in costs and cost management exercise, a value management exercise happened in the international business post the integration that happened in April 13, and that has given us some of these benefits.
All right, since we are on that point, are you actively scouting for any inorganic acquisitions? I mean, is there something material on the anvil that we can expect?
At any point in time, we would look at inorganic opportunities, but what we believe is that for any company and a consumer goods company, I think organic growth is something which is something which should happen. So therefore, I think the shift in strategy is we saying that the baseline growth, can we grow in a baseline growth of 15% in international business every quarter through organic means, and use inorganic being a top-up. And I think we have certain 4 or 5 core markets. There are adjacent markets or adjacent categories, and there are enough headroom for growth organically in international business.
Okay, on an absolute basis, though, your ad spends have surged to 190 crores in Q1 versus 170 crores last year, same quarter, and 134 crore quarter on quarter. Any particular reasons for that?
I would ask you to, I think, look at ad spends over an annualized basis, because obviously, depending on quarters, there could be a situation on the marketing plan or the innovation calendar. There would be some kind of variation in the ad spends. I think we'll continue to hover between 11 to 12% annualized. So I don't see any significant change in ad spends on an annualized basis.
Okay, a more macro question then. A lot of your peers who have reported the Q1 results have maintained that the bulk of recovery is still likely in second half of 2014. Would you agree with that?
Yeah, I think, yes, it will be a gradual increase. I don't see a hockey stick kind of increase. Also, I think we are monitoring the movement of the monsoon and therefore the consequent inflation or the dip in rural consumption at any. I think what is going to change, we feel confident that there will be a revival of urban consumption, and we are seeing some signs of it. But I think I will concur with most of them that you will see much more better signs mostly in Q3 and Q4.
Okay, so finally, just to give us a sense of what the way forward will look like, what can you guide by way of top line and bottom line growth for FY15? Will the performance stabilize over the next 2 to 3 quarters?
Well, I think, as I said, that we expect a gradual recovery in volume. We think that we should be able to deliver a 7 to 8% annualized volume growth for us. That's something which, given the current circumstances, will be a good performance, and a 20% plus top line growth in the immediate quarters. And I think, as I said, there are input cost pressures, especially in copra, and therefore there will continue to be some margin pressure in the immediate term.
All right, Mr. Gupta, we'll leave it at that. Thank you for joining us. That's the word coming in from Marico. Strong set of numbers. In fact, they're guiding for a better volume growth performance, and that's the reason the stock is up almost 11% odd.